All right, there we go. So a very good afternoon, good evening to you guys. Welcome to today's live geometric trading market outlook. My name is Kenny Simon, the head of research and education here at Blackwell Global. This particular live webinar here is brought to you by Blackwell Global in collaboration with FX Geometry. Okay, so let me just check whether we've got some questions. Okay, we've just confirmed loud and clear. That's brilliant, Sashi. Thank you very much for you guys confirming. Sound check, everything's great. So we shall then start. Before anything else, just a bit of the risk disclaimer here, just a bold part here that I will read out to you if you guys don't mind. Forex and CFDs are leveraged products and involve a high level of risk and can result in the loss of all your invested capital. Therefore, Forex and CFDs may not be suitable for all investors. You should not risk more than you are prepared to lose. Before deciding to trade, please ensure you understand the risk involved and take into account your level of experience. Seek independent advice if necessary. There you go, guys. For the rest of it, you guys can always read that as well in your own time. And if you've got any questions, feel free, email me at academy@blackwalltrader.com. Okay, that's brilliant. So let's get going. I know there's a lot been happening. Even the start of the day, we've got quite a number of events. We've also got expected events coming through in the Asian markets as well. Has been it kick-started, I would say, in medium sort of mode in terms of volatility or even liquidity as well. So we have got a couple of patterns that I have mentioned as well over Telegram group, a couple of things. So before anything else, I just want to talk a little bit about what's expected in economic data. As you can see here, I've just have a screenshot here on events for the whole week, and I'm only paying attention to the medium to high impact events. As you can see, for the whole week, we expected some movements. I would say predominantly for the euro, the AUD especially. We've also got GBP expected. I think today in particular we have got the UK's Prime Minister's speech, if I'm not mistaken, in about less than 7 hours time. That's something that may actually spark off some interest, whether it's on the buy or the sell side, but mainly it's got to do with the movement of currencies in reflection or in response to what the Prime Minister would say. And tomorrow, Tuesday, the 16th, we have got a couple of high impact news, as you can actually see here. And we have got, let me just show you, we've got all these red ones here, a couple of medium impact one. Because of the volume of medium impact, I wouldn't say volume, but the number of medium impact ones for the GBP, I must warn you that you want to take a look at top 10 movers as well. You want to take a look at all what would actually be moving the market tomorrow, whether they would pay a lot of attention to GBP, especially because we have got the producer price index, if I'm not mistaken, or yes, price index for April will be announced tomorrow, and then we've got all this group of medium impact news as well, together with that high impact news there. And then we start off tomorrow's market open with the Royal Bank of Australia's meeting minutes. So that would then spark off, as you guys know as well, Australian dollar is quite correlated to the GBP, and then we've got euro as well kicking in. So I must guess that there would be quite a big impact on movements. It would actually impact movement of a couple of currencies, especially the euro, the GBP, starting off with the day with AUD first, because we have got GBP here. So I would guess that the GBP would wind down today, but correlated to the AUD. So both GBP and AUD would I think move quite a bit, because it would then prepare enough momentum as well to be marinated into tomorrow's event. As you can see, quite a number here, more than 5, you see. And you've got the producer index, as I've said, and then when market opens going into the busier European zones as well, then you've got the European ones kicking in as well. You've got a medium impact one as well to look out for, but then you've got the gross domestic product for euro, okay, and that's marked in red here, as well as high impact. So we've got, I think, quite a good focus on these pairs, especially the GBP, the euro, the AUD, even the CAD and the dollar. But for the first couple of days of the week, I would say starting today until Wednesday, you want to pay attention to the GBP as well as the Euro. So Euro GBP, you can actually look into what's going on there as well, a couple of correlated pairs. And then as the week moves on towards the end of the week, then you could see that it will wind down, but giving more movement to the Australian dollar, especially as well as the CAD. Okay, maybe some of the dollar, but mainly AUD and the CAD as well. So these are what may actually start to happen. Now, as of today, let's just go on to the chart a little bit before I talk about USD CAD, because we've got this pattern that has been discussed last week. Before we go on to that, let's just look into a little bit about trends and I would say the high movement or trend-wise high movement currencies. So we've got on the upside as of today, market open until now, we've got the AUD, the CAD, and GBP. It's on the strong side, bullish, and then we've got the JPY, USD, CHF. Now I'm talking about in general, more or less a neutral standpoint. So you could see that from a 30 minutes to 1 hour type time frame that I'm talking about. So this is basically it. So we've got the GBP, the AUD, the CAD on the upside, showing strength to the upside or bullishness, and then again JPY, USD, CHF to the downside or bearish type. Now, interestingly, a lot of investors, I mean, based on the top 10 movers as well as the bank reports that I've seen, they are quite interested in the NZD JPY, looking at the NZD to the upside. Now, this is a bit of a funny thing that you guys need to understand, is that even though it's a part of the top 10 movers, when you look into the barchart.com or live charts for the heat map, the NZD is not really showing that strong of a trend, okay, but it is still showing on the upside, but maybe ranked in number 3 as opposed to the number 1 strongest currency. But in the top 10 movers, you could see that there's a lot of interest, at least top 3 or top 5 that are looking into buying the NZD. So this does actually give a bit of a hint that there may be a lot more room for the upside of NZD JPY. Okay, so NZD JPY, what you could do is to also look for NZD JPY correlated pairs. Okay, then this would give you a lot of hints of what other pairs that move alongside with NZD JPY, whether it's a negative correlation or positive correlation. Okay, so pay a lot of attention with NZD on the upside and JPY on the weak side, meaning are they getting weaker and weaker for the JPY? Is it getting stronger and stronger for the NZD? Then you can then combine with other pairs, okay, and look into that. Now, BNP Paribas, for example, I've mentioned, they are paying, French bank, they are paying a lot of attention to the Euro GBP. So as we have mentioned earlier on about fundamentals, as well with the economic data, a lot of interest, I would think, as well, because of the economic data releases due for the Euro and the GBP. This would then impact. So they are shorting the BNP Paribas and a couple of other banks as well. I've just noticed as of early this morning, they are actually shorting the Euro and buying the GBP. So we are looking at possible patterns that would support GBP strength and the weakness of Euro, as well as NZD strength and the weakness of JPY. Okay, so just these few 1 or 2 pairs, then you can look for patterns. Now let's discuss this one first. Now USD CAD on the 1 hour chart, we've discussed this last week. I think there are some more opportunities to the downside at this level here. Now for USD CAD, it is trading at 1.3608. 1.3608 is just too close to 1.3600. So if at all, let's say based on psychological numbers are potentially a reversal area. So it's probably not a good thing to trade. I would say place trades exactly or within 10 pips of psychological levels. So psychological levels are levels that prices could easily reverse as well within a, I would say, a window of about 10 pips or so. Now there are 4 sets of psychological numbers. These are based on the last 2 digits of the price. So if the price is 1.3609, 09 is what we look at 4 decimal places after the decimal point. So we want to focus on the last two digits. Okay, so here if it's 1.3608, I'm looking at 08. Now 08 is not exactly bang on the psychological numbers. There are four sets of psychological numbers, and they are 00, okay, 20, 50, and 80. So I'll just write that down so you guys could get an idea. So you've got 00, give me a second, 00, okay, 20. They are not, they shouldn't, it's not necessary for them to be in order. Okay, just watch out when the prices are exactly or too close to these numbers. So 00, 20, 50, and 80. So I'll explain a little bit more. So here, for example, based on these four sets of psychological numbers, what you would always need to know is you've got 1.3607, let's say. 07 is closest to the 00 area. Okay, so closer to 00. Now, if we have that price, let's say, mark the psychological number that the price is closest to, so this would make it 1.3600. So what I would what do you call it, advise, not advise, sorry, what I would then suggest in terms of applying psychological numbers is based on most experts as well. I would say traders, strategists, they are usually looking at placing their orders under the psychological number at least by 10 pips if they are looking into selling. And you could see this easily evident with bank reports and bank reports, HSBC, Citibank, and all that. You could actually see that if they're recommending or having recommendations or suggestions on price entry or anything like this, you could see that it's usually close but not exactly on the dot. But if at all, if it's on the dot, the psychological numbers, then it's usually quite risky to actually enter right at 1.3600. So if you are looking into a bearish sort of trend and wishing to enter the market on a sell, let's say, it's probably best or ideal, as the experts have also advised, to trade lower, at least 10 pips and under the 3600. So that would then give the price of 3590 as a more ideal, less risky, higher probability type price based on price action itself. Now then, if you look into that price, then you've got the next one here, 3560 is marked there. So you could then look at 350 is still okay as an ideal exit area, okay, to actually what do you call that, take care of the risk element. So 3590 and then 3560. So there's a bit of a 30 sort of pips window to the sell side for the USD CAD 1 hour, in terms of probability as well. Okay, so at the big picture USD CAD, you're looking at a Z-like pattern here. Within the Z-like pattern, as discussed last week, we have got the C to D that we are looking at falling to this area here. So within that C to D move of the Z pattern in yellow, we have got the ABCD pattern, or the geometric ABCD pattern, that is marked in purple. So we have got two confirmation, the C to D leg, and then the yellow part of the leg, as well as the purple part of the leg, and they both coincide. They are different patterns, but these patterns are pointing to the same direction, to this area here. Okay, so that's for USD CAD on a 1 hour chart. In summary, a little window for selling within 20 to 30 pips or so. I mean, as a probability. So that's based on the patterns there, as well as the price action, in reflection of psychological numbers. So there you go. That's USD CAD, guys. Now let's move along. I'm just going to show you, because the market's moving now. It's pretty fast as well. It's just picked up. We've got the USD open and a couple of other things. So we want to skim through all these trading opportunities that we can actually find, and this is based on geometric analysis, geometric what do you call that method, combining fundamentals, play, price action as well, sentiments of the market, a couple of other things, and then reflected onto the pattern. So here NZDJPY appeared as the top 3 or so in the top 10 movers. So a lot of I would say that quite a number of banks, hedge funders, they are also paying a lot of attention to the buying of NZDJPY. But it's not ideal for us just to base on that report and straight away enter. It's probably best for you to do your own risk evaluation as well as apply your strategy and combine the usage of both technical and fundamental analysis on this. Okay, so here for example we've got a pattern that looks like this. It started off with just a simple ABCD pattern as such, and I like the C area here that bounced off from the moving averages. So we have got an expectation of prices reaching that area of 79.89 area. And how did I get that pattern? It's just started off with the AB area and I made that equal in length of CD to project that. So that is one way of projecting or making a forecast of where roughly prices could end up at based on the principles of geometric patterns. So these are not really 100% new method. These are applied a lot in the markets as well, ABCD, but I've tweaked that to be geometric. Now, this stays as an ABCD pattern until we draw a single line like that, and you combine the A point to the D point, and you get a zigzag type, more like a, you could call it anything you want, a bow tie type pattern or whatever type pattern, but it's geometric, meaning it's made up of two sort of triangles, and they are quite good in terms of principles of trigonometry as well. So here, when it crossed that level of crossing, it's a very interesting one. It's called a centroid. I named it the centroid area, which basically is where the AD and the BC leg meets, and that could ideally be a trading area. Some experts, strategists have used that as well as the entry and all that, but it's probably best for you to always tweak your entry by evaluating your risk using psychological numbers. So here it's marked at 78.41, let's say, but if I do something here where I zoom out, you could see that most often than not, that centroid area would always mark significant support resistance levels as well. So as you can see, you've got right on the dot there where prices have actually depreciated significantly as well, and that area there is, it's been quite what do you call that? Usually it's an area, that central area is an area where prices could potentially respect that area a lot. So we want to also respect that area a lot. So here, in other words, if you're looking at, based on the centroid area, if you're looking at an appreciation of price, it's probably best for you to look at prices going above that center point area. So I've marked that above center point area as 78.60. Why? Because 78.60, if you've got a two-digit decimal place like this, then you want to look at the two digits after the decimal place, which is 0.50 is the psychological level. So if you're looking at an appreciation of price, it's probably best to look at 10 pips above the 50. Then you could, you could look into more participation of the buyers at that price, okay, based on price action. So 78.60 would be more an ideal area to look at if you are aiming further to the 79. 80s area. Okay, so 78.60 would be a potential area. Now we're only trading at below 78.40. Okay, so needs a little bit of time for you to look into prices reaching the 78.60 area onwards. Then you've got a little bit of clue or hint that the buyers have actually come in much more. Okay, so we want to always look into the market as buyers and sellers, as people, even though it's quite technical, things are quite not very human, I would say, looking into all the candlesticks and all that, but it's always best to look into the reflection of these candles are from human beings, are from investors themselves. Okay, so we want to see that the buyers have actually come in and put more interest into buying once they have gone into 78.60 and above. Then you could aim that 79.80, but it's probably best to watch out for the reversal area of 79.80. So I'll just mark that price area right here. Okay, 79.80 area. Okay, so here you want to watch out for 79.80 area, which actually means that if at all you have got 79.80 area as your potential reversal zone and a window of about 10 pips, then 80 minus 10 is about 70. So 79.70 would probably be a better price to look at, whether it is your exit area or whether it's a potential reversal. It's probably to take that not on the dot of 79.80. So you've got a trading area of entering or participation of trade entry 78.60, let's say, and then you're looking into potential reversal area at 79.80. So it's probably best 10 pips below that to look into, to expect that reversal. Okay, 79.70. So 78.60 and 79.70. And in this case, you can always do a how do you call that, a one-to-one type ratio for your stop loss. So if your entry area, let's say, just as an example, to the take profit area is about 20 or 30 pips, let's say, then you could equalize that with the number of pips for your stop loss at also 30. Okay, from the roughly the entry area to the area about 30 pips. So it's 30 pips, 30 pips. So it's a one-to-one ratio, one-to-one risk to reward ratio. Okay, so that is NZD JPY, guys. So you've got a bit. A lot of patterns are all just, you know, waiting, and there's a lot of waiting. It's a couple of pips or so, but you've got minimum of 20 to 30 pips to look into an opportunity there. Okay, so we've covered USD CAD, NZD JPY. Okay, let's look next at Euro USD on the 4-hour chart. Okay, now for whatever that I'm showing you, whether it's a 4-hour chart or let's say 1 hour, 4 hour, you can always look into whether you got the similar type pattern or smaller pattern on lower time frame. Okay, but what we are concerned about is the trend. Okay, as we've mentioned earlier on, it's more strength for the GBP, the CAD, AUD. It's more weakness for the JPY, USD, CHF. Okay, so you want to always keep that in mind in terms of trend. Now here, very interesting one, the Euro USD on the 4-hour chart. Interesting one, meaning there may be a potential or a probable ABCD pattern here marked in red. Okay, this one marked in red, it's quite nice, meaning that it started off a bounce at the either one of the moving averages here, which is I like it that way when it's bounced off there, but the better part of it is to find support at the C point from either one of the moving averages. Now, for those of you guys who are new, the 3 moving averages that I use are the 50, 100, and 200 exponential moving averages. Okay, and they are used solely as a trend indicator for me, so I don't use it to enter or exit or look into crosses, nothing like that. I'm just looking into whether or not the candles have bounced off from there, making the C point of the pattern that I'm looking at. And the other thing is to look at whether the candles are above all the 3 lines like now or under all 3 lines. If they are above all 3 lines, it's showing you bullish momentum like this one here for the Euro USD 4-hour chart. So the 4-hour chart, I'm looking at the potential of an upside type move, and we can always convert this ABCD pattern in red into a geometric pattern. Now we just simply do that in order for us to look into the centroid area so that the trading area could be identified to being above the centroid area. So the centroid area there, let me just mark that right there, and that's marked at centroid area for the ABCD pattern. Bullish ABCD pattern for Euro USD on the 4-hour chart is marked at 1.0919. Now 19 is closest to the psychological level of 1.0920. Okay, 1.0920. So it's a no-no trading or participating in anything when it is right at the 1.0920 or within 10 pips. So if at all it is an ideal area that we are looking at for more bullish participation, we need to wait until 10 pips above 0.930 to show the momentum to the upside. So 1.0930 could potentially or probably be in a more ideal trading area. Okay, so 1.0930. Now 1.0930 here, let's say price have already gone past that, which basically is a good sign. So price has already passed that central point. Now we are looking at this blue zone. This blue zone is marked the highest zone area at 1.0998. 1.0998 is closest to 1100. Okay, so 1100, and we've got a little bit of opportunity here. If it's 1100, so you are looking at 1110 as your ideal area, and then 1168 here. Okay, so for those conservative traders, they may be looking into the 1150 area as well. So let me just mark that because of the psychological level. So you need to watch out for 1150 areas. So it's probably best in terms of expecting a reversal before 1150. So ideally you could look into 1140. Okay, some of the traders are looking at 1140, or I've seen one of the bank report have actually mentioned 1140, which is 10 pips under the 50, which is basically an ideal area as well to consider the exit area. So this is based on the bank report that I've also posted last week. We have got that prices, so the prices match there as well with the geometric type pattern analytical method. So this is a good sign. So we've got, let's say you want to wait for prices to go above this blue zone, so it should actually be above the 1.1 what do you call 00 area. Okay, 1.100 area, and that should then look into more potential up. So if we're looking at prices breaking out of this blue zone, then you've got a little bit of you've got some good amount of pips of approximately 140 plus pips to look into once prices have broken out, okay, from this blue zone area. So if it is showing a lot of momentum, you've got what do you call that, you've got prices, let's say now above the three lines, yeah, as you can see on the 4-hour chart. If we go into the 1-hour chart, you can see that it's the same thing. You've got candles above all three lines, which is showing bullish momentum. If we go into the daily chart, you could see that's the same case. So this does actually show that there may be potential to the upside. As you can see, even on the daily chart, you have got a lot of bullish type momentum reflected by the way the candles are moving. The bullish candles are moving quite strongly as well. So in summary, Euro USD is giving you some potential opportunity to the upside, okay, and it's probably better or best to wait till prices break out above this blue zone, and then giving you an opportunity of at least 140 plus pips potential, okay, as a probability. But as you go into the 5-minute chart, for those of you guys who want to look into shorter time frame, you still have that as well, prices above all three lines, as you can see, and it's a very good sign. So what you can then do is look into ABCD or bullish ABCD type pattern, convert it into a geometric pattern, and look into opportunities to the upside. Okay, so you want to also look into Euro / USD forecast. Let's say type it into Google and type the words Euro USD forecast, and click onto the news tab on Google and look at whether you've got any latest news about the Euro USD. If not, the other way as well is to type in the word just Euro and then economy or something like that, and just put in Euro business economy and simply click onto the news tab and look at whether you've got latest news that would support the bullish momentum of the euro. Okay, or look out as well for news, any theme, anything that is discussed by politicians or any big boys in the market talking about positivity or anything good and nice and rosy about the eurozone in general and the euro, because this is looking like there's got some pickup of price for the Euro USD. So Euro USD, we're expecting a breakup. If at all breaks out of this blue zone, it's probably a better sort of play to the upside. But again, you always want to look to the right and left as though you are crossing the highway. This is the highway of the foreign exchange market. You want to look right for the price, the current price now, and how close it is to psychological level. You want to look left to look into potential reversal area in the past, where has significant resistance has actually been in the past for the Euro USD. So here, for example, at this area here, you have there had definitely been a couple of falls of prices as well. Okay, so we want to always make sure now where prices are at We've got a couple of support as well, as you can see. So you want to always look left and try to draw the significant support resistance zone. Now, I do not believe in support resistant lines or a single line or a level, but it's probably best for you to always draw a zone, okay, as opposed to a line. Okay, that's probably a better, more proper way of outlining your support resistance zone or area. Okay, so Euro USD, that's done. Now let's just then go on to GBP USD. We'll cover your questions as well in a bit. I just want to skim through trading opportunities as promised to you guys on this webinar. So GBP USD here, based on the 1 hour chart. Now let's just look into the trend side of things first. Now, with the application of the 3 lines exponential moving average, as you can see, the 3 lines themselves are not giving you clarity, a clear direction. The 3 lines does not move upwards or downwards, but they are moving sideways. Now, sideways, a 3 o'clock type angle that usually hints us uncertainty. All right. So if I go into the 4 hour chart, you could see that it's a little bit better with the 3 lines moving upwards, and they are separated. They don't touch each other. They're not entangled. This is better. Okay. Now, as I see it in a 4 hour chart, it's still hinting me some possibility or probability of a bullish type momentum. Prices has peaked out, gone above all 3 lines, and it's finding support as well. Has found support at the 100 moving average. Okay, as I go into the daily chart, I see that the candles are moving a little bit higher above all 3 lines, which basically summarize the trend to be bullish from 1 hour to the daily, but it's not too strong or high in probability, mainly due to how the 3 lines are acting, or the 3 lines are actually moving not that well, I would say, meaning that they're still entangled. They're not giving you that straight 3 lines pointing upwards and then not entangled to each other. You see, so here we could say that yes, it's reasonably bullish. It's got some potential to the upside, but do not get overexcited with it, okay? Because we need more hints, we need more confirmation. So hence the reason I think it's awaiting the economic data release as well, starting from tomorrow, or perhaps today's Prime Minister's speech later on in the evening. So that could then pave out the way and give you more room to the upside. Now, let's just look at whether is there an opportunity GBP USD even on the upside. Now here, because it has bounced off here, there may be some room to the upside, but I'm more concerned about looking for patterns that would match, and whether or not the fundamentals are really giving that push, proper push to the upside. Perhaps once we hear Theresa May's speech, we could then get a clearer direction, and if it is a positive side of it, then I would think that more patterns would emerge to the upside for GBP USD. So in other words, in summary, we'll just ease down for the time being, waiting for more clarity in terms of pattern and price, because the reason as well is that we have got prices trading at this moment of time for GBP USD at the 2919 area. So that is just simply too close to the 2920 area. So we need prices to go above the area. Okay, so let me just clear this one here. Okay, so here you've got 2916, sorry, and that is still very close to the 20 side number. I need prices to go above 2920 area at least by 10 pips. So we would need to wait till prices give us hint of a bullish momentum once it reaches, if it does, at 2930 and above. Okay, so here on the daily chart, there definitely is something here that we want to take into account, is the movement of price as such making the wave but finding support at this area. So we've got that bullish type momentum to the upside. When I go to the weekly and monthly, on very longer term, a couple of months and onwards, we're still seeing bearish type movement expected in terms of trend basically, but I would say there may be corrective move as of now from medium to long term, not too long term, but from medium to long term potential. But here itself, if I am showing you, as I'm showing you now on the 1 hour chart, it may be a potential of a Z-like pattern that is looking as such. Okay, this is on the 1 hour chart, meaning I'm expecting a probable move to the downside to the 1.28 80s area, okay, before it makes that momentum to the upside. Because this is a bullish type what you call that Z pattern, the movement would usually be like this. This is how the Z pattern looks like. Now we are looking at trading opportunity at the last leg of C to D, because that is A, B, and A, B, C is up there, and D, and usually AB's length is similar to the CD's length. So that's one way of projecting or predicting where D could fall to. So that's the 1.2880s area. Now you would need to mark off certain areas like the support zone. Look at this area here and look at this area here. Okay, you've got some support areas. Probably quite nice with a rejection candle like this to draw your resistance, your support type zone, so that you get an idea of where the support area is. Even price is on the way, or there may be possibility or probability for the downside, we need to look at where roughly they might find a bit of a support before heading downwards here. But once it heads downwards here at D, we are then looking at an upward move. So in other words, we've got a Z-like pattern, okay, of for GBP USD at the 1 hour chart. We are expecting a downward type move to the 1.2880s area, but that downward move from C to D usually comes in the shape of an ABCD pattern like this. So it may be on the way down, but then finding a bit of support and correction first before it comes down towards D. Once it does find the D area, there may be a potential of a reversal. So usually a Z-like pattern comes down to this area here and then find a support and goes upwards. Okay, and the upward move is usually about 50% or so of the C to D. All right, so that's your opportunity that you can find for the shorter term is to the downside, in summary, for the GBP USD towards the 2.880 area. So if it is at 1.2880 area as your potential TP area, let's say for example, then you want to always be very careful with the reversal area and to really eye or be aware of the 1.2870 area. So you want to look at it earlier. So you want to expect the reversal at least 10 pips before 2.880 area. So what do you do then? You would need to then decide as a trader what should you do if you know or expect the reversal to be at 1.2870. Okay, all right, good. So we've covered a few. We've covered USD CAD, NZD JPY, Euro USD, and GBP USD as short-term type opportunities that we can expect in the span of now to a couple of hours or even today's trading day. Okay, these are the four. Now let's move on to a couple more before I take questions. Okay, so you've got at least a handful of trading opportunities provided to you by us here at both Blackboard Global as well as FX Geometry, and through this geometric trading method. Okay, so let me just erase all these ones here. Okay, so we've got that Z-like pattern marked in red. It's a bullish type pattern, expecting on downside for GBP USD. Let's move on to another GBP pair, a GBP NZD. Now this one has just happened, just very, very recent. So what we've done is this one here, for those who are actually new, we were trading the C to D move. We drew this ABCD pattern. So this ABCD pattern, we wanted to trade from C to D, okay, and we expected the A to B length to be C to D length, okay, so that actually marked this area here, and then we pulled the Fibonacci from A right down to B, okay, and we look at where C has actually moved, where C has actually landed as well. So now I think most traders have actually taken profit much earlier as well, because it was expected to reach the 1.8706. So 8706 is too close to the 8700. So if you are aiming downwards, then you want to expect a reversal 10 pips above 8700. So most traders, experts as well, strategists, they've exited way before using this method at 8710 instead. So you would have been saved, and you would have taken profit, and you would have traded, I would say, the entry area at the centroid area based on past analysis, okay, would actually be, let me just give you a bit of an idea, by converting this ABCD pattern into a ABCD geometric ABCD pattern. So that's based on the centroid there, marked at 8820, right on the dot psychological number. So you would need prices to go under 20, at least by 10 pips. So that would give, based on previous results, let's say, as an example, those of you guys who would be applying this trading method would be trading, the trading area wouldn't be at 88.20 but 88.10. Okay, 88.10. So let's say you have traded 88.10, probably taken the profit as well at 87.10. Okay, so 87.10 and 88.10. So that was a very nice, significant number of pips as well. So that went on really nicely as well. Okay, all right. So that was for GBP NZD, guys, just to show you that that's what had happened, the result of trading, applying the geometric trading method. So here on the, just following up on the on this pattern that we've traded on GBP NZD, at this stage, based on the 4-hour chart, it's in terms of timing, not really an ideal trading time, mainly because prices or candles are entering the 3 lines. If candles are in within the 3 lines, they are not an ideal trading time or area, okay, because we need candles to be above all 3 lines or under all 3 lines to give you that ideal sort of trading zone or range or area that would be offering you a higher probability, lower risk. Okay, because the risk of it reversing is getting closer due to the 100 EMA that's closest to where prices are at this moment. Okay, so we've covered GBP NZD. Let's look into one that seemed to be really interesting, especially for gold on the 4-hour chart. So I would like to talk a little bit about gold before we open up the the session to questions. Okay, so here, for example, on the 4-hour chart, we have got 2 patterns here, and they are both similar type patterns, but they are both the Z pattern, but one is giving you the bigger one in blue, like the one here, is actually a bearish type pattern, which means it's a bearish Z pattern. Smaller pattern is what could actually be happening now, and the bigger pattern in blue is what to expect overall. Okay, usually you've got smaller patterns within a big pattern anyway. So here, for example, we are looking at both patterns trading the C to D leg, sorry, for the blue Z pattern, but trading the B to C leg for the purple Z-like pattern, which basically in summary means that there may be room to the upside. In both patterns, is giving us some hints to the upside, but the upside move may pose some risk of reversal at the purple lines between 1238 to 1243. Okay, so be aware of that. So you've got some space of 1234 right up to the 1238 area, but there may be a potential reversal area. But if prices at all reaches that 3 lines and manages to break out above the 3 lines, or in other words above the 1243 area, then you've got more room to the upside. But I would think it's probably best for us, if at all you are considering prices moving up and up and up, and it has definitely pierced through all these 3 lines, and let's say gone above 1243, I would think it would be safer to look into prices going above the 200 moving average first before deciding further. Okay, so we need to also evaluate the what do you call that, the movement of the dollar, the strength of the dollar. If you guys have got access to the USD index chart, look at what the USD index is doing to give you a hint or clue of how strong the dollar is, because the USD index is an index that compares the dollar against 6 other currencies. So that would give you a little bit of a outlook of the strength of the dollar against 6 currencies. Okay, so this is a good mean of measuring or evaluating the strength of the dollar, and the strength of the dollar does actually help decide the weakness or the strength of gold, okay, against the dollar. So we have got that going on at this moment of time. So both pattern, as I've mentioned, is signaling a potential probability to the upside first before reversing. Okay, so once it goes up, if it does go up, then it would actually meet the criteria of the Z-like pattern, of the purple one, and also the blue one. Okay, but then it will then basically, once it reaches the area, it would then look into more fall to the downside. Okay, so there you go. We've got that going on at this stage, but let's just look into a little bit for gold to the shortest term as well. Okay, we've got this support going on at this stage. Let's just look at shorter time frame. Now, as you can see here, you've got a nice corrective move here that actually met exactly on the 200 moving average. So if you see this move down here, you can regard that as your A point, and then B, and then C. I like it when the C, as mentioned many times, this should be one of your criteria to measure the probability of the pattern, meaning your C point, if it lands on either one of the 3 lines, it would offer you higher probability, but it could be a support or a resistance, meaning in this case for a bullish type pattern, the C point finds support at the 200, so that's quite a good sign. Okay, and if I draw that line here, this will give you an idea of where prices could potentially weaken or start to reverse. Okay, so if I do that there you go. You've got, if you're taking that trade, then your exit area would have been much earlier, so that would be under that 1234.35 area to take advantage of a short type what do you call that trade for the gold on the 15 minutes chart. The 15-minute chart did actually post this opportunity in the past, so I'm just giving you a little bit of pointers of how you could have taken that opportunity based on this pattern alone on the ABCD, and you convert that ABCD pattern into a geometric pattern, and then you look into the centroid area as your trading area. So you'll be looking at participating in the trade to the upside from the centroid area and above, right to under this area of 1234. So the trading area will give you a bullish type momentum, a bullish type opportunity from 1230 onwards right to 1234 area, 0.35 area. So that's a short-term 15 minutes type chart. Now when we go into the 4-hour chart, you just have got a very different picture. The traders, or the pickup of prices is just entering the 3 lines, you see, and they are looking to the upside type move. And if it's based on the what do you call that, purple line, then you've got some movement of the purple pattern to go up to the 1263 area before it finds a little bit of corrective move to this area here. Okay, so at this stage it's a little bit risky to just think or guess that it would definitely just shoot up just like that, mainly because we have got a resistant area at either one of the moving averages as well. So this is something to be aware of. You've got a risk area, so there is no guarantee or certainty that prices wouldn't come down to this area first. Okay, the reason I say that is because if I take this purple line away and look at gold from this angle, then I still may have the risk, may find the risk of prices going up just a little bit, find some resistance at either one of these three lines in purple, and then find its way down to this level first. Okay, this level first, because it hasn't actually reached this level here. All right, so this level here is 1198. So maybe, just maybe, gold traders would like prices to be cheaper. So you've got the big boys perhaps like that price to be much lower before they can buy later on. So there's still some room. So the question is, where would gold find resistance at? Would it find resistance at this, either one of these three lines? If it does, then it might make that move downwards. So your B2C move would then extend all the way down here first before finding a potential upward move to the 1247 area. So perhaps there may be a potential. So in this case, in summary, for gold, you would need to maybe wait and look at whether or not the sellers would actually take control and find resistance. Then you could be selling, looking at the selling opportunity right down to the 1198 before finding a opportunity to the buy side later on once it bounces off upwards. Okay, so that's an overall type picture for the gold at the 4-hour chart. Now let me just clear off all these ones here, and I want to look at the shortest type time frame on the 5 minutes, let's say. Okay, and if you look into this, you've got the trend still looking to the upside on the 15 because of the movement of candles above all three lines. As you go on to the 1 hour, again, it's giving you the hints of candles as well, hinting the upside type move. And again, you're looking at that strength wanting to happen to the upside as well, but it's entering uncertainty zone at this stage. So we need to look into whether or not there may be potential to the upside, but a risk of finding resistance between 1238.99 area to 1243 area. Okay, so that's roughly an area for gold. I wouldn't, me personally, wouldn't look into what do you call that, trading it right now, because there's just too much risk to the upside that may actually just pin down the price because it's just too close to the moving averages as well. Okay, so we've got some question here. Very good. So okay, sure. If you want to, okay, we've got a question here about expanding on how I've established the potential blue sea. Okay, the blue sea. All right. So here, let's just look into that. Now, this is for gold, okay? Now, this is called a Z-like pattern, which is a bearish Z-like pattern. We start off A here, B here, C here, okay, C here, and then D. Now, if we start off from A to B, you would need the Fibonacci to help you establish this area here, all right? So if I pull my Fibonacci from here, from A right up to B, okay, I see that the C point would then land potentially at the 200 moving average. If it had landed at 1.618, then the D point wouldn't equal to about 50% Fibonacci. So I will explain that again. So if I expect or make a forecast of C coming down to this area of 200% of A to B, then I could see that this equals this, okay, in length, yeah, AB equals C to D, yeah. But then if I do that and expect prices to come down to the 200% here, that would then make this pattern a higher probability pattern, because if I pull my B to C all the way down, I can see that it is closest to the 50% right there. Okay, so that's the reason why I would prefer for prices to come down lower, find resistance, and go lower to this area, so then it would pose more buying opportunity from this point, because prices would then want to complete a Z-like pattern. But once it does actually make that rally from the 1198 area, okay, all the way upwards, then that move upwards from C to D would then be in a probable shape of an ABCD as well. And once it does complete that route, then you're looking at a reversal again to the downside, because this is a bearish type pattern. You've got A, B, C, D. And usually AB equals CD is one way of a projection. The other way is to project D is to pull Fibonacci and expect 50% of B to C. Okay, and once prices has gone upwards, we are trading only C to D and then D to E as well to the downside. Once it is actually have reached the D area here, it's usually expected to come downwards, and that downward move is expected at about 50% of C to D. Okay, hope that's clear for you guys on gold. I mean, it's good to look into that bullish momentum now for gold, but do not let it trick you too much. Looking at that big bullish candle giving you that hints of an upside trend, because with that you would always need to be aware of that risk level first. Pay more attention to the potential risk level, so that you could then polish up your probability level of trading that instrument, whether it's gold, whether it's currencies or so. Okay, so here, for example, I would prefer gold finding the resistance and then heading downwards to the B area here. Okay, and once it does, then it would then complete and make that probability of the Z pattern higher. And only once it's done that, come downwards here and then starting to reverse, then I've got a higher probability to look into the success of this Z pattern. Once it goes up this way, then we know that we've got that upward momentum or trading opportunity to the upside for gold. In other words, in summary, it's a little bit too early to buy, but with that, it's just too much risk to expect in this buying of gold at this moment of time. Once it does, from a patterns perspective, come down to this area, the probability does actually increase for that upward move. Okay, so I hope that's clear for you guys on that. So that's gold. So we've covered a few. Covered USD CAD, NZD JPY, Euro USD, GBP USD, GBP NZD, as well as gold on the 4-hour chart. You can always look into other patterns in sync with that direction of trend in shorter time frames. Okay, so let me just clear this one first, and before I open up the session to questions, let's just look into whether we've got any other sort of potentials here. Okay, I would like to talk a little bit about how well the AUD USD have actually materialized. The formations were fantastic. As you can see, we were trading the ABCD pattern, the geometric ABCD patterns, and we've got the red one and the yellow one. Both have actually reached its TP levels expected, and then bounce off right on the dot of that TP area at 73.34 area. Okay, some of us have actually taken profit at the right psychological level being tweaked, so that has actually helped us a lot. We've got the yellow and the red, as I've mentioned, both are the bearish ABCD patterns bounce off now, and I'm just looking at whether or not we've got more room to actually trade another ABCD pattern once prices have actually found resistance at this area here. Then you've got A, B, and then C around here, and then D again. But let's look into the price of action. Now price is trading for AUD USD at the 0.7443 area, which is an area to watch out for because it's very close to the 74.50 area. So we would need prices to go above 50, at least to the 60 and above, only then it would signal more bullish momentum. But at this stage, you know, we would need to monitor price closely because it may only be finding resistance at the 74.50 area potentially. Okay, so we would need to have price confirm for us whether or not it would like to fall further after finding resistance at the 74.50 psychological level. Okay, so that's for your AUD USD. Let's see. Look into a couple of other things. Now, we have got perhaps more price action, more to look into potential fall, let's say of the AUD and ZD as well on the daily chart. The reason I say that is I'll just clear all these first. Let me just clear all the lines right there. Second, so we'll start fresh. There may be a potential for AUD and ZD on the daily chart to the downside, but we need prices to confirm that. Why? Because it's finding resistance very nicely here. C point at the 200 at the, yeah, let's see, at the 50, sorry, moving average right there. So if I pull that, making that my A to the B, then I'm looking at my C very nicely with a nice sort of rejection candle at the 61.8, which is my favorite ratio, Fibonacci ratio. So that would give you some room to the downside right down to the 1.0472 area, but to watch out for 1.0480 area. Okay, so as your potential reversal area. So we want to look into A, B, C, D on the daily chart. So that's quite a significant type move on the daily chart. If we mark that one there on the AUD and ZD daily chart, if I do that and all the way down here, that would just stay as an ABCD pattern, but we would always need to, geometric trading method, meaning that you would need to convert this ABCD pattern into a geometric pattern. So once you've done that, then we have got that as your centroid area right there. Okay, so we're looking into, if at all, looking to the downside, more momentum by the bears selling it, we need to make sure that that momentum is picking up to the downside only after prices have gone down and under 1.0700 area, because it's just too close to the 00. So 1.0690 would be an ideal, but better still, to be more conservative, is to wait for prices to go under all these three lines and under the 200 moving average right there, and then tweak the price that you see under that 200 moving average to the psychological level, and then take it from there to the downside. Okay, and aiming that at above 1.0480. So we do have quite significant nice drop, but only under all these three lines. So if we're expecting that, the thing is that now it's not ideal in terms of trend because prices are in between all three lines. So if we go shorter time frame for the AUD and ZD, we may get a better hint there and build a story from the 5-minute chart, looking into prices picking up. You've got picking up of prices. Okay, 15-minute chart. Let's look into the 30. It's still unpredictable. They are still trading. You've got a bit of you've got some uncertainty because prices are not above all three lines or under all three lines. You've got some support there on the 1-hour chart. On the 4-hour chart, it's uncertain. So at this stage, I would say it's probably best for us to wait till price action give us more hints of the trend direction, as opposed to trading when candles are in between or in trading in within all three lines, which is always a little bit unsafe or uncertain. Okay, AUD and ZD that is. Here we've got a very nice play at AUD JPY. Prices bounce off there right at that zone that we have predicted together last week, and we've got prices found support as well. So we've got some more bullish momentum for AUD JPY. Okay, and you've got more bullish momentum as well. The euro is showing more strength. It's one of those pair that we need to look into pairs basically individually, because the banks are looking into shorting the Euro GBP. So let's look at what's going on into the Euro GBP, as I've mentioned earlier on by BNP Paribas, giving us some shorting sort of signals for the Euro GBP. So let's just look into whether we could find some hints from a geometric perspective or patterns perspective. So they're actually shorting it, but usually banks are giving you that sort of signals. It's usually for the swing type trade or for the longer term. So we might find some reversal for the time being in shorter to medium term. So we should always we will always need to confirm that. By confirming that, meaning we confirm that based on our trading method. okay, looking into the charts as well as combining it with fundamental factors. Now, with 1 hour chart, we're looking at bullish momentum, as you can see very clearly, just at a glance. You're looking at candles, showing at that bullish type momentum, finding support from moving averages as well, and bouncing upwards. That's on the 1 hour chart, and they are above, candles are above all 3 lines. For the 4 hour chart, we are looking at a potential, we expected earlier perhaps some resistance here, but resistance didn't really follow that much, so it was quite a small type correction, found resistance at 200, but then it bounced off fast. So that actually hints some more bullish momentum to the upside even on the 4 hour chart. On the daily chart, we can then see that prices are just slightly under the 3 lines, but the 3 lines are not giving clarity of a downward. The candles itself, they're not far away below all 3 lines. So let's look into the weekly chart. We're looking at some support potential right there on the 50 moving average for the euro. And then as we go on to the what do you call that, the monthly chart, we're seeing some bullish momentum. So here it's giving us some sort of contradicting type signal for Euro GBP, because the banks, they are looking at shorting, but what we are wanting to know is always to start off a story that's clear for us. At this stage, it's contradicting big time, so I would suggest we avoid this pair for now and we look into price action and clearer pattern, especially 3 time frames or more time frames are actually giving you that direction of what the banks are looking at as well. Then it would probably be best, rather than us just picking out banks signals and trading it that way. It's probably best for us to always confirm ourselves and be clear with ourselves first and not follow blindly the banks, because the banks can get it wrong too, and they do quite often. Okay, because who knows, they're trading, they're giving you the signals and they're giving you these hints, and it always looked good on their report with their brand name and everything, but who knows whether they are trading what they're actually preaching. They may be telling you that they are shorting, but then who knows, they're actually hedging their own signals. Okay, so these are all possible, probable or possible things that are actually happening. Okay, so there you go. We've covered quite a few, guys. So it's been quite good. It's got some trade opportunities for you guys as well. So now I would like to open this session to questions. Any questions at all for the pairs that you are trading? Perhaps troubleshoot a little bit on pairs that you are looking at, but challenging to understand, or looking at the clarity of trend direction, or any doubts at all with whatever that you're looking at. This is what we're here for. We're here to share with the others, and I'm here to share with you on anything I can, and we share it with the group. So let me know, guys, any questions at all? Perhaps somebody would like to start, because some of you guys may be a bit shy. All right, Sasi. Okay. All right, you missed the USD CAD. Yes, of course, we can repeat the USD CAD. Let's look into, yes, I think we've got some questions here. I think I've missed some questions as well on NZD USD and NZD JPY. So let's also answer that. So the question was, hi Kenny, does NZD USD follow similar type pattern as NZD JPY? Now, it could not be, but it does actually depend. One way of knowing that is to look at correlation. So you can always go to find correlation, whether one pair moves in opposite direction or the same direction, and whether or not the correlation is high or low. It's best for you to go to Mataf, mataf.com, or you can type in Mataf correlation. Okay, just type the words Mataf, MATAF, and then the word correlation onto Google. Go onto the site and look at NZD USD, and then you look at the correlation. I might be able to show you what I mean, okay, in a while. So NZD USD and then NZD JPY. Okay, so let's look at the correlation there. The other simplest thing to do is to open up both chart and evaluate them based on 3 time frame, especially 1 hour, 4 hour, and daily. okay, and look at the correlation there. Look at it. If it is showing you that very clear right in front of you, that correlation is very clear, they move either the same direction or opposite, but very clearly opposite, very clearly the same direction, let's say, then you know what kind of correlation they are and how good they are. Okay, it's always good for you to experiment yourself as well. So, but I'll show you the correlation in a bit. Okay, so for USD CAD, let's look into USD CAD and look at what we have actually seen earlier on. So USD CAD, there you go. So USD CAD, we've got this price coming downwards, and it's actually sort of in progress of the C to D move of the Z-like pattern that is in yellow. At the same time, it's also completing the C to D move of the purple ABCD pattern. Both patterns are giving you the same direction or probable direction to the downside, aiming at the 1.3560 area. Okay, so 3600 is an area to look at because prices are now at 3607, very close to 3600. So the question is, will prices go under the psychological level of 1.3600? Once it goes under it, showing a lot of momentum to the downside, then you are looking at the price of 1.3590, and once prices have reached the 3590 area, then you may have a probability of entering for the trading opportunity to grab pips at the 3560 area. So you've got a bit of a window of trading opportunity, I would say, based on probability wise, between the 3590 and 3560. So you've got a 30 pips type window of opportunity to the selling side. Basically trading area at 3590, exit area 3560 as a potential area, but you would need to always look into the area of risk as well. So you want to that these numbers of price have been tweaked to the psychological level. So in other words, summary, USD CAD 1 hour chart may have an opportunity to the selling side, a window of 30 pips or so, starting at 3590 down to 3560. Okay, is that clear? Hopefully that's been cleared for you. Okay, for the USD CAD. Okay, so once it finds that area there as support, then you're looking at the potential to the upside. Okay, because this is a Z-like pattern in yellow that is also a bullish Z-like pattern. So upon completion at the D, it usually finds a support area to the upside. There you go. So now let's look into NZD-USD and NZD-JPY. Okay, so NZD-JPY, you've got that movement now. Let's look into NZD USD. Okay, so we've got NZD, there you go, NZD USD right there, and then you're going that way. Now we have looked into NZD JPY. 4-hour chart looks like that. NZD USD, let's just get rid of these. All right, 4-hour chart as well. Let's zoom in a little bit. There you go. So when we look into the NZD USD, it on the 4-hour chart, and then we compare that to the NZD JPY, it looks like it's negatively correlated. So you've got prices went up, find correction and found support here. NZD USD went down and then find correction up there. So we've got a potential bearish type pattern here, exactly the same in opposite direction of the NZD-JPY. So you have got one here that offers a potential trade-like opportunity. Let's say if you want to take it right, that one there, and find it there. You've got it there right at 61.8 as well. Okay, so if you take this one there, Then you've got right at the 61.8 area as well, or 70.7 area. So you've got again some room to the downside. Draw a little bit of a ABCD this way, let's say, and then you've got that. So in other words, to answer your question as well about correlation, when we see this on a 4-hour chart, we immediately have got a clue, a hint of a negative correlation. Quite a strong one, I think, because look at the way it moves and how it actually found resistance or support. It's almost the same. Only thing is the pattern, looks like it's totally opposite. So they are quite highly correlated, but negatively correlated between NZD-JPY and NZD-USD. But it's always no harm to still check, as always, both currencies or currency pairs on the trend on different time frame as well, and just to make sure, here it's just signaling that down type move. Okay, on the let's see, monthly as well, you've got always one under all three lines, and with the weekly chart for the NZD USD, again it's under. On the daily chart, you've got that under as well, quite far under, which is a good sign to show you more bearish type momentum. It's finding that resistance right there. So it's a little bit too early anyway to look into it because it has not passed the centroid, but you can always draw that very nice ABCD all the way downwards. At 6 o'clock move, found the resistance here. You've got always candles weakening as well, and then if that one is another, it might actually just mirror that move as well, but draw an ABCD pattern and find that centroid. So yes, in other words, you've got that negative correlation between NZD-USD 4-hour chart and NZD-JPY quite strongly, I would say. And you can always compare that and see whether or not on the 1-hour chart you find something similar. Okay, so we change that now to the 1-hour chart and look at what we get. Okay, so 1-hour chart on the NZD-USD look as such, NZD look as such. So you see on the 1 hour it may be positively correlated, okay, and then you find that it's totally negatively correlated quite strongly and nicely as well on the 4-hour chart. So there you go. This is basically going to give you much more hints as well, and to look at different time frames. Sometimes you find two pairs that all three time frames are correlated similarly, and that is usually a very highly correlated pair. Okay, so 1 hour is negatively correlated, 4 hours negatively correlated, daily is negatively correlated. So that means it's negatively correlated and strongly correlated negatively. Okay, all right. So there you go, guys, and I think we've covered quite a bit. We've got some trading opportunities for you guys, of course, so you guys have seen it for yourself. You've got prices just playing as we're looking at it now. And any more questions before we end this session today? Any questions at all, guys? Any more questions? You guys want to also look into the what do you call that? Zero H, what do you call that, news as well. Zero H Talking Forex. Okay, it's quite a good site. Talking Forex right there. If you see the partner access denied thing, just click on again. Then you will find it like that. And here you've got all this news. Always click onto the F5 as well, just so that you get it refreshed. Okay, and you can see here, for example, just about a while ago, you've got, in fitting with expectations, French President Macron has chosen Edouard Philippe as his prime ministerial candidate. So that might actually give more boost of confidence, perhaps, because the President Macron is giving out positive sort of sentiment. Okay, this is for now. Okay, and we don't know what would happen later on when he kicks into being a president in real, meaning starting to function as a president. That one will come later on. But as of now, him being elected, who he is electing as he's part of the team, all that is giving some positivity into the market, especially for the Eurozone as a general, from a general perspective, as well as the Euro. Okay, so that basically may be the reason of why the euro is finding that momentum to the upside as well. So here it gives you a little bit about the morning roundup and a couple of other things. The good thing about this site as well is it just gives you that results of data that has been released, a couple of things that would hint and give you additional support into the news side of things based on that particular instrument. So your ECB spread says that the central bank will assess risk balances in next month's meeting. So you see it's got a lot of things. So we want to expand, we want to look into the news as well, look into the sentiments that's been produced. Okay, so we have got GBP CAD. All right, let's look into GBP CAD before we end this session. Okay, so GBP CAD, let's look into it very quickly. So GBP CAD. Okay. There we go. So at a glance, on a 1 hour chart, very quickly under all three lines giving you bearish type momentum. As you zoom in, you look at the movement as well as that from the very top here to the very bottom here, it's a 4 o'clock type angle, which means that the downtrend is picking up. Perhaps it's a new sort of momentum or trend that is picking up. It's not very strong, but it may just been picking up after a sideways type move, perhaps. Okay, for the GBP CAD. Now, on the 4 hour chart, we want to look into that angle. That angle is slightly stronger, entering and going under the 50 moving average, heading towards the 200 moving average. So you've got that momentum pickup to the downside. From here, it gone lower at under the 3 lines, but the 4 hours is just starting to go under the first line, which is the 50 moving average, and it's weakening and weakening. Okay, so what do we see at the daily chart? Now, daily chart is above all 3 lines. It is still weakening a little bit, but this could also mean it's a correction. Okay, it found a bit of momentum to the upside. Okay, let's look at the very long term of the weekly chart. You can see that momentum is to the downside. It found that resistance, but I would like to see more resistance, more candles down. That would then give a very nice momentum to the downside. You could trade that as an A, as a B, as a C, but this is a weekly chart we're talking about. Yeah, so it's a bit too far away. So we've got again hinting of what do you call it, resistance and bearishness. So we now know that the longer term, it may be a hint to pull prices to the downside much more. But what about looking at it from the 5-minute chart? On the 5-minute chart, we have got prices finding that corrective move, piercing through the 50 moving average and trying to go upwards, and it is trying to go upwards big time. It's actually trying to pick up that momentum, but let's look right and left. As we look right, we look at the 7600 area, and we need prices to go above and above, as you can see, above 20 at least now, because it's got the next sort of resistance here at the 200 moving average to watch out for. As you can see, prices just weakens itself down again. Okay, now going to the 15-minute chart. On the 15-minute chart, the story is, yes, it's finding that upward momentum, but will it then find resistance at this 50 moving average as well? Okay, so yes, the finding of momentum looks like there is some room upwards, but it may be a corrective move before it comes down further from the way it's moving at this stage. So 30 minutes, it's finding that, but look at all the prices are quite far away from all 3 lines, and it's finding that momentum. This could easily be a spike type candle finding that momentum upwards, but could easily be a corrective type move. On the 1 hour chart, it's the same thing. It's got all this bearishness actually. So you've got CAD much stronger than GBP, but you want to also look into the what do you call that, into the trend that I've actually mentioned. Now at this stage, remember when I mentioned the 3 strong pairs to the upside, they included AUD, CAD and GBP, okay, both on the upside. The problem is CAD and GBP are both in the same direction wanting to pick up to the upside. So you've got two currencies going through the same door. What happens? You and me goes through the same door, we get stuck. So it's not really a clear type direction that can actually be seen, because you've got two competing currencies to the same direction. Okay, we want two non-competing one. One is aiming up north very high and one is aiming down south very low. That would be a better combination of a pair. Better combination of currencies to make out a pair. That's ideally best to pick out. Okay, so there you go. And I wonder whether the GBP CAD is also part of the top 10 as well. You know, which ranking would it be out of the top 10? Is it far down below the 9th or the 10th one, or is it the first 5 top 10? You know, this is also very important for us to consider picking that pair only if it is considered by the bigger boys to be picked as well. Okay, all right. Let's see what else goes on here. 4 hour here, we've got that trying to pick up type momentum. So I would say it's not very clear at this stage, but if you are making out a story from low time frame right up to medium or long, you could see that there may be a probability or possibility of trend picking up to the downside if you compare GBP against CAD, meaning GBP may be picking up to the upside, but compared to Canadian dollar may be a bit stronger. Okay, so GBP may be stronger with other pairs, but with CAD is the stronger one at this stage. It looks like it that way anyway. But because you've got both trying to pick up momentum to the upside, hence it's not that clear, the direction as well as the pattern too. Okay, so there you go. I hope that's been clear. At this stage, you've got candles, you know, going inside the uncertainty area as well for the 5-minute chart especially, but you're looking at to the downside. Now here, if you're looking at potential to the downside, on the 30 minutes, there may be quite a nice clear one here. I think you guys have spotted that as well very nicely. So here you have got that, but I would also, you know, suggest to look into the trend and make sure that the GBP has got loads of other fundamental reasons and news and everything else to show that weakness against the CAD. Okay, so if you've got a lot of backup and looking like CAD is on the strong side, much stronger than the GBP, and GBP has weakened somehow, then you've got that potential. But watch out for what Theresa May be talking about and what sentiments could she actually be causing after her speech today, okay, in another couple of hours time. All right, so that is quite interesting to watch out. You can always go to the Guardian.uk, you can always watch that live type, what do you call that, news commentary that comes up as she speaks as well. So that's Guardian, the Guardian.uk, okay, .co.uk. So that would be nice. And there you go. So you've got one like that, and if you pull that Fibonacci, oops, sorry, it's a wrong one there. If you pull the Fibonacci from the very top to the very bottom there, you've got a 50% type move right there expected. 50% would equal to about 200% extension expected for the D. So that would then mark that second potential area. So you've got two possibilities marked by the two lines here between 1.7514 and 1.7508. Both are quite close to their respective Fibonacci, the respective psychological numbers. So 17514 closest to 20, 17508 closest to 00. Okay, so here in terms of selling area, it has already passed that selling area, if not mistaken, meaning the centroid area right there. It's gone past the centroid area, so it's just giving you basically some more room. So, but what we want to know or look at is when prices go under the 7610 onwards. Okay, because the closest psychological number now is 7620, so you need prices to be under at least by 10 pips under the 7620 area to look into more bearish momentum to the downside. Then you could look into the what do you call that, probable exit take profit area above the 75.20 area, which is 75.30 and above. So if you're looking at 76, 76.10, okay, you mark off at 76.10, let's say. Okay, mark off that as 70. Oh, I'm sorry about that. 76.10 probable area. You need prices. You see, prices is just finding that momentum to the upside, but there may be the next risk upward is that area there at 50 moving average. So we need prices to go up. If it does, find resistance at about 50, that 50 exponential moving average, and then back down, but it needs to back down and come under 76.10, aiming at 75.30. Okay, so 75.30, let's just mark that, 75.30. There you go. So you've got between that and that as your trading area, potential number of pips. Let's say if clients, if traders, have entered there looking at that sell side opportunity, they're looking at close to about 70 pips or so, okay, which is ideally good. But at this stage, a little bit too early until prices go upwards, find that resistance as I've mentioned, reverse and come under 76.10, and then it would have a better opportunity or better probability to reach this area here. At this stage, it's probably finding a bit of a corrective move before it heads lower. Not yet at this stage. Let's just wait, monitor price until it goes under 76.10 and below. There you go, guys. I think I've covered that a little bit. So hopefully that's giving you that better idea, clarity for GBP CAD as well as the other pairs that we have discussed today. So any more questions at all before we end this session, and we will meet up again on the next webinar on Thursday. Any questions at all? You guys are all clear, ready to ride the trend and grab the opportunities? All right, no questions at all? Okay. All right, just giving another couple of seconds. Okay, we've got somebody who just typed in. All right. Okay, brilliant, Sashi. Thank you very much, guys. Okay, so what I'll do next is to end this session, but firstly and foremost is to thank you guys for attending my webinar today. Thank you for your time. I wish you guys happy pipping. All the very best in your trading, and hope that's been a beneficial webinar for you today. For any questions at all, feel free, contact me, send your questions to academy@blackwalltrader.com. It's the same for requesting for the webinar, today's recording as well. You could send an email and make your request there. And I just want to, for those of you guys who are new, who just attended the webinar today for the first time, I'm based in Blackwall's office here with all my recordings done there as well at the WHH buildings. You can see our locations in Cyprus, in Limassol. Okay, it's in the middle of the Mediterranean Ocean, this island of Cyprus. I've got my telephone, the landline number right there. It's with the code, Cyprus code, and then telephone number, and the email that you can reach me at is academy@blackwalltrader.com together with your request for the webinar. And the website address is at blackwalltrader.com. It will also, redirect you when the time comes as well with our new website and everything else to Blackwall Global. So Blackwall Global, Blackwall Trader is under the umbrella of the Blackwall Global company. Okay, so there you go, guys. I would like to once again wish you all the very best in trading, happy pipping, and a very big thank you. Okay, thank you guys. Have a very good evening, and we'll see you again in the next webinar live as well on Thursday. Okay, thank you very much. Bye-bye now.